Welcome to the crowd. My name is Sherwood Neese. On this week's episode, I want to talk about how regulation crowdfunding is diversifying access to capital for women and minority entrepreneurs. But first, let's get into the weekly numbers, the online investment index, and what's happening in the world of crowdfunding. So, the online investment index, which tracks the top 50 regulation crowdfunding offerings, was up 34.1% or 182.5 points last week. This is the fourth week in a row that the index was higher than the prior week, so investments keep on pouring in. April ended the month with $50.6 million in commitments. That puts April at the second highest month for capital commitments. March was the only other month that had a higher amount than April, and that was $70.2 million. There were also more than 53,000 investors in April's offerings. This makes April the second highest month for the number of investors as well. Keep in mind that a vast majority of these investors are retail investors, so this represents a shift in the private capital markets as more non-accredited investors jump in. While some people might think that this space is too risky for retail investors, keep in mind that the average investment since the industry began is $790, and the average amount in April was $949. So we believe this represents a rational amount and an amount that should not risk an entire individual's savings. The top 5 companies that drove this week's index were first, Satonics Corporation. This is their second week on the list. They're a Jupiter, Florida-based biotech company that is developing diagnostics and therapeutics for osteoarthritis. They are running a Series C offering on Seed Invest last week. They raised $1.3 million, up 135% over the prior week's $552,000 raise. And they did this from 554 investors, which is up 102% over the prior week's 274 investors. In total, they've raised more than $4.6 million from more than 2,500 investors at a $46.7 million valuation. New to the list this week, we have Driven Technologies. They are a Boulder, Colorado-based manufacturer that is rethinking the drivetrain parts of bikes and e-bikes. They raised $658,000 last week at a $3.3 million valuation. Following that, we've got Cre Guitarist. It's a San Diego-based guitar manufacturer with patent-pending folding technology for what they say is impossible portability. It was named as one of the most convenient guitars by Forbes. They raised $674,000 last week from 132 investors at a $4.5 million valuation. In total, they've raised over $1.5 million from 362 investors, as like I was saying, a $4.5 million valuation. Following that, we've got Jane West. They are a Denver-based cannabis retailer, which is turning out to be a hot space in the online finance industry and clearly a target of many investors who see the potential in this industry. They raised $530,000 last week and closed their offering with a total of $735,000 from 948 investors at a $15 million valuation. By the way, I think we need to point out that this is the second Colorado company that is on the top 5 list from this last week. I think Colorado is a perfect example of a state with a lot of entrepreneurial spirit, but definitely not the epicenter of VC funding. So startups need to find alternatives, and clearly regulation crowdfunding is turning out to be one of those avenues for them. If we move on to the last one, we've got Airtium. They are a San Francisco-based battery manufacturer. They claim that their battery is 100 times cheaper to produce. They're a Y Combinator alumni, and they raised $503,000 last week and closed their offering with $1.3 million from 1,427 investors at a $17 million valuation. More and more our lives are shifting to devices like our phones and laptops that require batteries, so this should be an interesting startup to watch. These 5 companies have a collective value of $86.5 million, and there we have it: medical diagnostics, innovation in drivetrain technology, a flexible guitar, a cannabis retailer, a battery manufacturer. It's just another week of broad industry application in regulation crowdfunding. Okay, so now let's jump into who is getting funded. I took a look at the new offerings from last week to see how many of these companies had co-founders versus just a single founder, and how many had women and minorities entrepreneurs as well that were represented in their founding teams. And here's what the data showed. 38% of last week's issuers had just one founder. 38% had two founders, and 23% had three or more. Now, I like the idea personally of having a company with more than one founder because I think it really helps the management team figure out what they need to do to scale. And personally, you can just bounce ideas off of another co-founder. So it's great to see that the majority of these startups have more than one member of their founding team. Now, when we look at the demographic of the founders themselves, we can learn a few things. 67% of the founders were white males, 8% were white females, 13% were black males, and 13% were black females. Now, I'd be beating a dead horse if I told you how little Silicon Valley funds women and minority entrepreneurs. Currently, it trends about 2% of all the capital that's invested from Silicon Valley. So I think it speaks volumes, and it's great that you've got 33% of all of the campaigns out there having women or minority founders. I think this trend will increase, particularly as awareness increases that this is a true avenue of opportunity for them, and regulation crowdfunding clearly does democratize access to capital. So that's it. Make sure to subscribe to our channel for the latest news. Follow me on Twitter at WoodyN, WOODIEN. This is Sherwood Nice with the Crowd, and we look forward to seeing you next week. Thanks.